Pete, we're talking markets, we're talking what now, what next. Last week we saw a bit of a sell-off in the US. How have the markets opened this morning and what are we hearing ahead of this week?
Well, good morning, Will. You know, we had that sell-off as far as US equities Friday. There was a little bit of nervousness, US dollar. What's happening as far as the crude market up the best part of 10% over a matter of the last 3 days, leading into Australian equities today, possibly a little bit of further softness and just taking on board those moving parts and how the week plays out.
All right, a lot of a conversation around the place talking about recovery. The question really is Europe lagging the US, and will the stock market actually eventually sort of sit in this bubble that everybody's talking about?
First off is the euro. Yep, it is lagging. And we thought that it may have had a very, very strong last 3 months of the year. Now where we're seeing dramatic problems are those increases as far as COVID across Europe and into the UK. So that really could derail the whole euro recovery phase, and in turn we could see a bounce in the US dollar because of the fear factor moving in as far as the Eurozone. We've got PMIs coming out Wednesday across the Eurozone, and they're not that great.
They're not. PMIs. I mean, take a look at this chart. This chart's showing a fairly big dip here. Yep. We've seen a bit of a recovery. Thank you, the V-shaped graph that everyone's been speaking about for the last, 6 months. Will it be whatever the graph will be? And we're looking here at the dotted lines, Pete, that sort of suggests, well, hopefully they're reasonably flat.
Yeah, well, what the issue there is, of course, for the viewers, anything above 50 is expansion and anything below 50 is contraction, and we're nearly right on that 50 line. So it's going to be, whilst we get through this quarter, the issue leading forward is how do they look in November, and naturally how do they look in December if those ratcheting up as far as COVID. So it could be a very, very poor time for the Eurozone moving forward.
More on Europe right now. Let's talk Switzerland. We're talking about the Swiss National Bank here, looking at a chart here that's sort of demonstrating that the reserves, people are making deposits.
Yeah, they certainly are, and you see that it's nearly off the charts, so it's been incredibly strong. Not only that, it's incredibly strong at negative 0.75% interest rates. So that's how much faith the investor has as far as getting the return on their money or return of their money in that Swiss banking system. So will the Swiss look at actually knocking interest rates to negative 1%? It's a little bit of an unknown at the moment, but we could actually see that sort of movement.
If we take a quick look at the RBNZ, the policy rates, obviously this chart showing the potential for it to go negative. Yep. Some information flowing through this week.
Wednesday, the RBNZ, do we see an introduction as far as negative rates, or is it going to be in the next month or two? Certainly worried about reinfection rates and COVID. So the storyline is a little bit mixed at the moment, and I would be erring on the other side that they won't go into negative just yet, but that remains in their firepower to bring that out later in the year.
Look, there's some question that suggests that the UK's PMIs may ease the pound, or may help ease the Brexit pain.
Well, they could, and there's wonderful to see that growth there and above 50. But the other side is those naturally the ratcheting up or the very, very quick increase as far as COVID numbers, and how will they look in October and November with a very cold winter plan. So yeah, the uncertainty factor, there are again so many different components into this. Which creates volatility.
Let's talk politics in the US dollar. What's happening there?
Well, we've seen that US dollar sitting around that 92.5 to 93.5 over the last month. It's been a little volatile, yes, and it's been nearly actually to 92. The issue is, how does Biden play? If Biden gets elected, and we're 5 to 6 weeks, well, we're 6 weeks out tomorrow, Biden gets elected, and if Biden was to get control of the Senate, then you would see, or the House, then you would see the other side, of course, which would be, everyone's assuming that, an increase as far as taxes. So there's the first part. If Trump is elected and he maintains the Senate, then you're going to see a very, very strong push, I'd say, from investor standpoint to drive markets higher. What action does he take as far as a trade war to the CCP? Does he ratchet that up? And it's a little bit of an unknown. But so they're the dilemmas, I think, economically that we're looking at. Also, does the US dollar have a ratchet up from here with the slowdown as far as Eurozone?
So let's talk a bit about the US markets for a moment. I mean, some are saying that there's been a meteoric comeback. I mean, it's been pretty consistent throughout. We've seen the tech guys drive some pretty big outperformance. We've seen that come back. Sure. So what we're talking about here, how do we unpack that meteoric come back?
I think if you look at a graph and you appreciate just a huge drive up from really April onwards, and what we've seen till August, early parts of September, has just been enormous driving through Fed balance sheet, that stimulus, and the retail investor, options traders, and I think just driving through. There's no reason to hold money in the bank. So that's what a lot of investors, it's a government-led rally, and this is the time to make money.
So is it a situation where the new money in the financial markets is really smaller time investors? So it's a small...
We're saying about 20% of the investment is coming from retail.
Right, and do we think that this has been driven because we're at home now a little longer and we've perhaps got time to have a look?
Well, there's the first part. The second part is you're holding money in, bank accounts. You're getting very little return as far as cash from interest rates. So you're looking at a market that's absolutely, you buy into the rally. The market's going up, you're hearing that, and this is what people are doing. This is the attraction of markets. Front page news, radio, TV, all forms of social media, commentators talking about a market that's parabolic. So everyone says, let's be a part of it. And they're educated, or they're becoming more educated with leverage, option trading, and they're the facts. So moving forward, that virtual loop is you drive equities up with options, and they in turn buy the equities. So in turn, you create more volume, yes, and performance to the upside.
This graph showing really the stock market's never been more expensive to be in it.
There's no doubting that. I mean, the return is, if you're looking at PE ratios, but you're looking also that there's that much, money's cheap, and yes, they're at high levels, they're lofty, but what's the alternative? Do people say, well, I'll come out of the stock market, I'll put it in the bank, I don't get anything? You take a chance with life and risk, and you analyse that, and you say, well, righto, I see an opportunity. We had that big pullback last week with, the last 2 weeks with Tesla, back to that 330 approximate. Now it's back up to 430. So you're seeing these volatile plays. Traders are all over it. Front page news, they're across it and they seek opportunity.
All right, mate. Well, let's talk the S&P 500, or in this case, what we're saying is the S&P 5, big tech pushing markets.
You bet. Have a look at them. It's just enormous, and the Amazon is just the monster in the park. What you've seen there, and that proves to you people are staying home, they're buying online, and that whole sector is just, it's outperformed everything. No one in their right mind could have come anywhere close to even forecasting that, certainly for the Amazon, certainly for Apple. And where they move from here, this could just be the September sell-off, traditionally at this time of the year. End of financial year in the States, and all of these factors, end of quarter, rebalancing portfolios. So, and you've got an election.
All right, Pete, well, let's wrap up. So the week that we've talked about the week before, let's talk about the week ahead. The three things you're looking at?
Euro PMIs come Wednesday. I'm looking at the RBNZ. I know it's only a small player, but do they move into negative territory, and what impact that could have to the Australian side as far as Frydenberg and Morrison's mindset? If New Zealand goes negative, well, that could be the new frontier of where we're going. And then the other side, crude's up 10% in the last 3 to 4 days trading. How much more upside is there in the short run? So I think that they're the markets I'm looking at. That will give me a clear understanding. And do we see that continual sell-off as US equities, or is this just a blip? So I think that's enough to look at for the week ahead. And again, volatility.
Peter McGuire, thanks for briefing us.
Thank you, Will.